AMD is telling you that we might be in for some pain for the next long period of time, maybe even up to 12 to 24 months. And that is just because we noticed that there are a bunch of monthly divergences on every single chart. Thank you for joining and thank you for clicking on my video, because today we like to go into the bigger timeframes on Saturday. It is good to look at the bigger picture and look at things that are going on around the geopolitical or even the political scape, because election time looks like if we could do this certain thing for the SPY, we actually could see a bounce come Monday, but watch out for election day, because I think we could experience an election day crash. So let's get into it. AMD real quick, we do see that there is monthly divergences formed. If you want me to zoom out on this RSI, that goes back to 3 points. So you do have a triple divergence for the RSI. You notice that price action went higher, so that there is divergence. And has that confirmed? It confirmed last week. We can always experience bounces, but this tells us that there is major weakness for AMD going forward. And is this going to be the first really big signal to tell us, hey, things are going to turn down? Well, we already kind of thought things were going to turn down, right? I was really leaning towards things turning down on the date of October 22nd. And if you want, we can even play that clip for you right here. But the main takeaway here is I do believe that we are forming a major top, and it could very well be right now. The signals that I'm seeing right now, as far as Nvidia goes, as far as the market goes, as far as, you know, the Dow trying to curl down and seeing if that can get a lower high, it really looks like to me, maybe we get one more 2-hour push higher, but I think we're coming to a dramatic halt very, very soon. So at the end of my videos, I like to give a little main takeaway. And during that video, I said I really thought October 22nd looked like a big day where we might be starting the downfall. This might be leading into the crash. And then later on, we actually said on this day right here, October 30th, we were using Nvidia to say a lot of these signals look really bad and we could crash tomorrow. Tomorrow could be a big day in the market to see some downside, and boom, to the downside. Maybe we'll throw up that thumbnail so you guys can see what we were paying attention to. Those signals did confirm, and boom, to the downside. Okay, so what were we paying attention to and what did we use in here? Well, first of all, you can notice since October 22nd, we have not exceeded the high of 584.50. This here went to about 584.46. So that is a good level as of right now, because that is really where we saw things start to gear up for a downturn. Now, what told us on October 22nd about this? Why was I leaning towards this on October 22nd? Well, I simply looked over at the housing sector, right? I was looking at the housing sector, and on October 22nd, we actually saw this confirmation, a very sturdy run. What we were talking about it here, we always still give both sides, and we say, watch if that turns back around, even though it looks like an ugly bar. The ugly bar continued. You confirmed that, and sometimes the housing sector can be a great leading indicator for downturns in the market, and it looks like this might have been one of those times. So that's why we were paying attention to it over for the SPY, was because that happened first and it followed the next day. Sometimes it takes more time, but it followed the next day, and that's why we were calling it out. From this point right here, by the way, on October 30th, a lot of YouTubers coming out and saying, hey, we are definitely going to head higher. And we were more saying, yes, we can head higher, but I, myself, my personal opinion was leaning towards a downturn. So I think it's important as we go into November to get you guys those monthly expected moves. The monthly expected moves for the SPY and the Qs are where we land 68% of the time, and we give those out on Patreon for just a cup of coffee a month, and we've used Nvidia for it, and we have been 4 for 4 on those trades. And even on Friday, you were able to hit a weekly expected move with pretty much a perfect sell for a Friday close. And we can notice that once I zoom out, you're going to notice, ooh, that's a pretty big range, right? If you have to really zoom out, that means volatility is most likely going to pick up. So something I'm paying attention to here, obviously the top side number, 649, right? We talked about 600. A lot of people talking about 600. We want to still treat the market like it can go to 600. Even if you really think this is going down, give yourself that 1% of you that goes, but what if we go to 600? Because that will keep you honest as a good trader, honest with the signals you're seeing in front of you, honest with paying attention to if those signals are outside of weekly ranges, because this is our 68% zone. What have we been using for Nvidia? Well, we've been using everything that is in our course to tell us the easiest trade setup. It is a really easy trade setup when you do see reversal signals outside of that. If you need to learn those type of things, because we're 4 for 4 on those trades for Nvidia, we traded it 4 times over the last 3 months with those big signals, and they all led to significant moves. And we're noticing that happen again. So we can say 4 for 4. It's worked 100% of the time since August. So what is going on here and how can we do this? Well, this is going to take a lot of work, right? Just because I say there's a chance of it happening doesn't mean that it has to do all this, right? We need to see basing out structure. We need to see this daily whip back around into positive territory and you got a shot. But you just broke out of a wedge, which does lean me towards going to the downside, especially on the shorter time frame. So I think it's good to pay attention to the bottom side monthly expected move. That would be 536.79. We will update the weekly expected moves on Sunday. So make sure you're subscribed. But when we zoom out on things, we really look at a weekly, right? We're going to go into those shorter time frames, look at those bounces that could happen. I wanted to show you the weekly time frame because not only is AMD telling you something massive on the monthly scale, but on the weekly scale, the SPY is showing you triple divergence at the top. It's showing you triple divergence at the top. We're seeing that divergence pop up on the RSI and it got more significant, right? And maybe I need to zoom that out so you can really see. This one was a little bit down, right? Just a little bit down. This one, way more significant. You notice we're just turning down from there as we break the wedge. We always can't see bounces and things like that, but I just wanted to show how significant that is on the RSI. The reason that I'm showing you how significant it is on the RSI is because of the last time. Let's go all the way back to 2021, right? Going into January 2022, we created a top going into 2022. And we noticed that we did have a bunch of little tiny flat divergences in here, right? Very, very flat, very, very flat. But once it got significant, notice what ended up happening. It got significant with this little push higher, and then we started the downfall. So we have that moment right now. We confirmed on Friday, right? It literally took all the way up until I think Friday to confirm this. And you have confirmed major signals that say, even if we bounce, we are going to head down. So I think it is more likely to end up at that bottom side monthly expected move than it is to head to the top side. Are you thinking to yourself as we jump into the Qs that what if this is just a blip, right? This maybe isn't a double top for the Qs in some way, right? We did not exceed the high, so maybe we're able to push higher, but we said, well, if you don't exceed this high, a lot of tops end up with, hey, the Qs cannot go make that next high, and the SPYs actually do. And we have that right now. The SPY has confirmed the divergence and has the Qs, and this is where it's very good to look at our MACD for the Qs, the MACD and the RSI, because we're talking about the divergences here, and the divergences were very, very, very flat here for the Qs throughout this whole move, and then now we're seeing that got significant. It got significant. That is turning down. We are breaking a wedge. So this is a big moment to pay attention to the bottom side monthly expected moves, honestly. 449.04 to the downside for the Qs. You do have 518.66 to the upside for the Qs. You land in here 68% of the time. If this was a 100% zone, all of us could get very, very rich very, very fast. No, you do land outside of these zones 32% of the time. That's why we look for reversal signals outside of these zones. We look for reversal signals outside of these zones, and the same thing comes for the weekly expected moves. We will update these for you on Sunday. We will go into the shorter time frames on Sunday so we can really track what could happen this week, because I think there is a chance that we actually do bounce for a couple of days and then we actually see the election, or right after the election, we actually see this thing create some kind of lower high on the shorter time frame. So please come back for those. But the important part to remember here is this got significant, and when you want to pay attention to that is when it confirms. And did it confirm? Yes, it freaking did. You see that little red blip. Friday was enough to leave us at lower levels. We always have the chance for a retest. We're going to talk about that on Sunday, but right now you're confirming a major signal. Now, the only reason that this could be a blip, right, this little crossing here could be a blip, is because this is showing red. This is saying this is crossing, but you're not technically below that 9-week moving average. And it's the same goes for the SPY. You're not below those moving averages as far as it goes. And that does happen a very minimal amount of the time. Most of the time when you do cross, we talk about this in the courses down there. Most of the time when you do cross, and you do see you below the 9, because this is following the 9 on the MACD. The orange line is following the 9, the blue crosses it. Hey, you're supposed to be below the 9. So this is a little bit wonky, which means we have to treat it that way just a little bit. But for the most part, this is confirming a major signal. So I'm going to treat it with so much caution, it's insane. I'm going to not take any kind of upward play here because the likelihood of this being a retest for a lower high on the shorter time frames is very, very high. Now, we always want to keep that 1% chance to move up higher. That's why we have a monthly expected move. But for the week, if we only have a weekly expected move, say like this high, well, then if we get outside of that and we make a little reversal signal, that could tell us a lot. And that's what we're going to pay attention to in the shorter time frames. But what I wanted to do for the Qs, which it's the same on the SPY, is show the divergences. And doesn't this look familiar? Isn't this starting to look a little bit, I mean, at least the behavior of the MACD, I know it's up higher, but isn't this starting to look like divergence up at the high? Slight divergence on the MACD, but very significant divergence here on the RSI. Who does this look like? It looks like AMD, which tells us AMD might be giving us a huge hint here. On this channel, we like to tell people to watch the whole video, right? It does help out the channel to watch the whole video. It does help to like the video so more people can see this information. We've called this very, very well last week. We've called it very, very well for a couple of months. But we want to be making sure that more people can see this type of stuff because a lot of people have money in the market and they are blinded, right? The media is strictly trying to trick you. Someone coming out last week and saying, oh, Meta is a great buy here. And we're going to talk about those signals. Oh, Nvidia is a great buy here. We're going to talk about those signals because in how I'm seeing things, this is one of the worst times in all of history to invest at these levels. That is what these signals are telling me right now on the weekly and on the monthly. So we want to pay attention to the fact that AMD has already confirmed this. AMD has already confirmed all of this. And you notice, if you even want to go back, remember AMD had a triple divergence on the RSI. Look at the RSI for the Qs here. You do have that slight downward direction for the first one. Now it's dramatically down for the second one, just like AMD. So I am reading into it. We'll pay attention to the shorter time frames, but I think you need to be very aware of this because if we start to go in a monthly downturn, right, and in 2025 we get down to levels like 250, we could bounce up and we could actually end up heading lower if we create the structure and our Fed or our government in some way does not save this thing because banks are in a ton of trouble. And this is where you start to look at stocks like Apple and you go, okay, this was the divergence that I was paying attention to in the past. We saw the weekly divergence in here. We can show you that in a second. But what I want you to pay attention to on this monthly chart for Apple is the fact that we made a divergence point, but that curled back up into positive territory. So they're using Apple, and I truly believe this. They're using stocks like Apple, big stocks with a ton of money in them. They're using stocks like Nvidia to hold the market higher. And you can look at SMCI, you can look at AMD, you can look at other big stocks, you can look at Microsoft, you can look at Google, you can look at all these stocks and say, yeah, they had an upward move, but these things are dramatically down from their all-time highs. So what we want to pay attention to is the fact that, Apple made another point higher. This wasn't the moment. Manage the trade. This is still some dramatic divergence here. You can see triple divergence across this level, and we can see that we made 3 points. So that's telling us maybe they are using Apple to prop up the market in a very fake way, or retail's getting excited, and we know that insiders are selling at an unprecedented rate. That's why we pulled up the SEC filings for Nvidia outside of its monthly expected move. People didn't believe, hey, that's going to come back down into it. It did, and we showed you how. If it's pretty much like this. There were tons of people, tons of insiders selling Nvidia at unprecedented rates that you haven't seen ever in history over the last 3 months, okay? And one of those people was the CEO of the company. The CEO of the company has sold more Nvidia stock than anyone in the entire world over the last 3 months. You might want to pay attention to that because every single stock is pretty much showing some form of weakness on a major scale. But right after I say that, Tesla's the one. Tesla's the one that has curled up and looks like it could actually be a good investment for the next 12 to 24 months, which is very interesting. Is this repositioning into stocks that people believe will do well under a President Trump, under a Trump presidency? I wonder if that's what's going on here. This is still suggesting that this is a good trade for now, right? This is some kind of good investment for 12 to 24 months. But that being said, we can look at the weekly scale here. And we would say if this weekly does cross over, though, even Tesla won't be safe, right? Even Tesla won't be safe if this is going to cross over here. And as we pull up a daily scale, is that weekly looking like it could cross? Well, you have triple divergence here. So if the daily does cross here, yes, we talk about in the shorter time frames that you can curl down into our buy zone and maybe curl back up. You can curl back up after testing these moving averages. We're going to get into that on Sunday. But for the most part, we just want to see, look at this. Look at that. It is dramatically down. These are coming in a little flat. So that's why we're going to pay attention to if this is a cup and handle or if this is a double top in some way, right? Sometimes with double tops, you go just barely above it. Because if this is a cup and handle, that would be a massive cup and handle creating a cup and handle. And actually Tesla could see some dramatic upside. So the monthly turning up does make more sense for Tesla to see higher prices, but if this daily turns down and we experience a black swan, I do not believe Tesla will be safe. We're going to go over the second one that looks a little bit different, which is Amazon, right? Amazon already confirmed the big divergence on the weekly scale, so we assume that this would be some kind of lower high. We started to cross up that MACD though, which means if we can consolidate and see that burst higher, we do have the opportunity to reach the higher prices. And this is the thing with earnings. And this is why I think we could bounce early on in the week, because some stocks like this are showing some upside after earnings, and maybe that's going to continue for a couple of days, but that could line perfectly up into the election. And what would you have on Amazon if we actually went a little bit higher and exceeded this, right? We get a little excited. You would have triple divergence across the way for your MACD, for your RSI at the same time, right by these center lines. So if Amazon does go higher and then experience a downturn, Amazon might be one of the best shorts if we do see something bad happen in the market, which I believe that this is really adding up to something. We have 5 different things that could happen: banks, housing sector, geopolitical things like Israel, Iran. We have just the election that could cause civil unrest. We have so many things going on right now that if this did push higher and we experience any of those things, well, then this actually could turn up and turn right back down right by that center line, which would mean it is a fantastic divergence and Amazon is about to go through some extreme pain. And we did talk about Amazon before the earnings, and we don't read into earnings very much because earnings is a 50-50 flip. You're kind of outside of the Bollinger. You could go retest or something like that, but I'm saying if it continues for a couple of days, you almost have a divergence right now. So in this area, we wanted to pay attention to the fact that before earnings, we did get the consumer income, consumer spending, right? And so the strength of the consumer spending was actually higher than consumer income, which means that most likely people are putting it on credit cards. We showed the delinquency rates scaling up just like they did in 2007, right before the big moment. And we're showing that because we're saying this is a moment where the consumer is still able to put things on credit. Once you exceed those levels with delinquencies, you're going to see bad things happen, and you're starting to see us exceed those levels as these earnings are coming out, as we're getting good consumer spending. That's the only way we were able to read into Amazon, was if consumers are spending out there, most likely it's on Amazon. So they most likely will have decent profits, especially as inflation goes higher and those margins get kind of crazy if Amazon's doing things right. So that's what I want to pay attention to with Amazon. If it does go a little bit higher and create some kind of weekly divergence, you only have to go a little bit higher to do that. Now we get into Nvidia, and just remember, on Patreon, we do give out those monthly expected moves, and we came outside of those monthly expected moves. We're going to talk about that trade setup more on Sunday, so come back because we'll refresh you on why we believe that happened. It happened here, good move. It happened here, good move. It happened here, good move. So if you would like to learn how to catch these type of moves, well, then you can take the course that's down in the description, the Using Technical Indicators course, the Technical Analysis course. Every single thing in that video will be useful to you, and it will teach you how to trade around monthly expected moves. So if you want to join the Patreon and learn that strategy, please go look at that. And people have used everything in the course to upgrade their own strategies as well. I've gotten multiple emails of people telling me how they creatively use the information they've learned, and I love to hear that. I think it's very, very cool. But we came outside of a monthly expected move. We had a 68% chance to land down there on, what was that? On October 31st, because of the monthly expected move. That's the last day. That is the close. And what did we do? We ended up pulling way down back into it. Actually, the monthly expected move wasn't there. The monthly expected move was more like here, right? And we ended up going back inside that by the end of the week. We tried to hold up of it on above it on October 30th, but on October 31st, we actually crashed down below it. So one thing that is different for Nvidia, and I think this is going to be your biggest crash signal. We're seeing a lot of the individual indices crossing this over. We're seeing a few stocks do it. We're seeing AMD do it on the monthly scale, but we're not seeing Nvidia do it yet. Okay, you're not seeing Nvidia do it yet, but if it does, I want you to pay attention to how significant this really is and how it is similar to AMD. You saw this big upward move. The only difference between Nvidia and AMD is it happened a little bit sooner, and now you're seeing Nvidia actually hold the market up. And this is what I'm saying. I think stocks like Apple and stocks like Nvidia, once they actually really experience pain, and mainly Nvidia here, because it's the one lagging behind a little bit, if Nvidia does cross down here, that's going to be a big problem because this is so significant. It is insane on the weekly scale. That is so significant that you have triple divergence again that got more dramatic at this point that you're turning down. So if you're able to cross over here, this could get ugly. I do think on the shorter time frames we have a chance for some kind of little bounce or something like that. So we'll go over that on Sunday, but I'd be really paying attention to Nvidia if this happens, because SMCI came out and, you know, their auditing firm was not comfortable putting their name on anything to do with their books. And Nvidia has been known to have the same problem. Smarter people than me have come out and said Nvidia has the same problem. They are fudging something in their numbers to make their revenues look better, or they're manipulating it in some way that's technically legal, but it is misleading investors right now. And so all the media is telling you that this is a great investment at the exact time where it is not a good investment. And I think that is very important to understand. And it's not me telling you that. It's the MACD, it's the RSI. Everything that you're going to learn in the course is right here in front of you, and this is something you really have to pay attention to. This means that Nvidia can go all the way down to 95.63 before it even catches a bounce. AMD, we already showed you these signals, so let's clean this up a little bit, but you know that there's monthly divergences here. You know that this is kind of leading the market right now, and if this has something to say, it's saying, hey, my stock, this AMD has extreme weakness. We said a couple days ago, AMD could end up towards 112, but with a monthly signal like this, you could head all the way down to test these lows. The lows back in 2022, you can test down towards $60. If you really wanted to, you go down to that weekly 200 if all of this confirms. Now, this could take a lot of time. Remember the last time, this took a little bit of time. It took like a couple of years there, right? So from this downturn right here, 2021, December, it took a full year before we were really able to base out and turn back up in the upward direction in positive territory. And that's something I wanted to mention here for AMD. We talked about at the beginning of this video, always give things a 1% chance. That way you're looking at things and you see some kind of bounce that could come and you at least say, hey, I'm going to take a little bit of profit and manage my risk in some way. I'm down by a monthly expected move. I see a reverse signal. If I don't want to take the up trade, let me manage my risk by taking some profit there. But at the same time, and we talk about that as well throughout everything in these videos, but for the most part, we want to say this could take some time to get down to these levels, right? I think this could be in the form of a bear market. I think we could even maybe see this go up first before we actually start to turn down, right? So I want to pay attention to that. But the real thing we need to understand here is this is showing major weakness. And the funny part about this is you didn't even see any kind of signals up here for the weekly scale to turn down. You just failed to turn up right here, right? We did not cross on this MACD, and then you saw that turn down. The only time you were able to bounce was when you actually were able to curl up daily charts down here. We were looking at those reversal signals in the past, and now we're seeing what? On the weekly scale. The reason that this is important to watch is if I blow up this MACD and you go look at it, what is happening? What do we always talk about? Watch if that bounces, but watch if that turns right back down, because that is going to be really close to the center line. Last week, you got to cross down right by the center line. You're closing at the lows. The likelihood for AMD to turn down here, to end up at lower prices by the end of the week or going on into the next few weeks is very, very high. We were talking about stocks that are holding the market higher, and one of those is Meta. Meta is holding the stock market higher right now, and you're noticing Meta doesn't really have the divergence on the MACD and RSI at the same time, but you can see one divergence point here, one divergence point over there. If you want to take the nearest curl ups, right, then you would say not on the MACD, but it is flat on the RSI, suggesting that this could fall. So what do we want to look for if we want to see if a bigger time frame can fall? Well, on any time frame I look at, if I'm looking for a 2 hour to curl over, but in this case we're looking for a monthly, I'm going to go down in the time frames and see if there's weakness. What do you see here for Meta? Right? Just answer the question to yourself right now. Say it out loud. What do you see here for Meta? Try to answer it real quick, because I'll tell you what I see. I see weakness in momentum. I see that we're going to a new high. I see that we're making a lower high on the MACD. I see that we're making a very dramatic divergence on the RSI at the same time. I always got to be aware on those shorter time frames. If we're going to see one more turn up, we can go into that. And but you can use these type of things on these bigger time frames to say, is this a good time to invest if this crosses over? Hell no, that likes to cross over monthly charts. So those people out there, if anyone's telling you that this is a great time to invest, oh, this is a stock to buy now, and you see it's at all-time highs, that's just the stupidest thing you can say. And I'm just being genuine about that. If you really think simply, you look at the state of the market, you look at how we downturned last time, and you see the exact same signals, and then you're watching someone who says, hey, this thing can, this is a great investment for 12 to 24 months. They are just blatantly not paying attention or lying to you, maybe getting paid by the stock to tell you to buy it. I don't know, which I do think that happens. I think media, either they're ignorant or they get paid by these companies to say these things, because it is directly opposite. And we see it for years and years and years that they say the direct opposite things. When we're calling lows, they're saying stocks are going to crash down farther. When we're calling highs, they're saying stocks are going to go higher. It's just blatantly crazy to me that that can happen and people still keep jobs in the media. But look at the divergence on the weekly, look at the divergence on the monthly, and or on the RSI, look at the divergence on the MACD, but on the monthly scale, you don't have that divergence. So if we are going to buy time, I still think this won't happen. I just think these are major traps. I think Nvidia, Apple, and Meta are huge, huge, huge traps right now. And maybe Amazon is too if it starts to go up a little bit. But for the most part, if this is going to cross down, I think that you won't catch a bounce until 453.08. I think you won't catch a bounce till 453.08. And that right there, just that alone from where the price is right now, is a 22% drop, or about 20 to 22% drop, because I'm trying to count these lows in here a little bit. But that's why I'm like, okay, so they're telling you to invest right now, and we could experience a 20% drop because of these signals. It's blatantly opposite. I think it is criminal. I think we need to change how things work. And I wouldn't, if I was an investor starting today, I would not look at 1 ounce of the mainstream media financial stuff at this moment. Now I'm going to show you one of the uglier signals. And we talked about how Microsoft has already come down a little bit, right? We said that a little bit ago. We said, yeah, look at stocks like Microsoft. Those things are already turning down. And the big reason that we have to pay attention to this month is because, and why you might want monthly expected moves for a stock like Microsoft, which we do have those, right? We don't cover it all the time, but I think today it's important as going into these bigger time frames, because Microsoft, as of right now, curling over on a monthly MACD. So if that continues to the downside and we close the month with this MACD curled over, it is suggesting that there is major weakness here. You're seeing it at the very beginning of the month. We'll look at those shorter time frames, right? We will talk about Microsoft if something sets up, but I just wanted to bring that to your attention. As you look at the weekly scale though, you can see easily how you'd be hurt, right? We want to pay attention to how you can get screwed. If you're thinking, oh, that monthly's crossing over early on in the month, so I'm going to take something to the downside, well, then that's a little risky. You usually want to do it once it's towards the end of the bar being created, which would be the end of the month. Make sure that is confirmed. But for the most part, if you did that, I'd be watching this weekly very, very closely, because if this weekly does turn up and cross up this MACD, it does suggest higher prices. But I also wanted to point out that we could make another divergence point here. That is still possible. I'm not leaning towards it. I am not leaning towards Microsoft making new all-time highs and then turning down. But notice I'm keeping that 1%. I'm able to think about it very clearly. One thing to notice here about Amazon is at this level here, you had flat divergence on the MACD, no divergence on the RSI. That would suggest a pullback. Correct? That would suggest a pullback. You'd curl back up. And from this point, that's when the MACD and RSI got significant. You can see if I blow up the MACD, that is when it turned down. That is when the RSI turned down. And notice that's starting to happen across the board for a lot of stocks. That's starting to happen in the SPY. That is starting to happen in the Qs. So what if in the daily scale, this is just some kind of head and shoulders, and that's why we had this line here all week, right? We talked about it during the live video for Microsoft. Hey, this could be some kind of massive head and shoulders. Sure, we can get that retest. We might have already did that. Maybe we even go up and really fake people out and get that lip that's on the end a lot of the time with these head and shoulders to really fake people out, and we get up to a sell zone before we come down. But this is suggesting that Microsoft has extreme weakness. It showed you the weekly weakness up in these areas. It's showing you the monthly weakness right now, and we'll have to see if that's able to confirm by the end of the month. So join the Patreon to get those monthly expected moves for stocks like Microsoft. Google is actually doing good things. Google has got the structure, it's got the structure, it's got the structure to head higher. This could be a retest, but I want to see if this is a retest, then I don't think that this daily MACD will curl down. If this is some kind of fake out, then I think that MACD curls down. I think maybe you fondle around in this area, but if you start to break below these levels, confirm going down into negative territory here for your MACD, it's going to be worrisome. As we pull up the weekly scale, just wanted to show this real quick. If we're wrong about that, and that's not going to turn down on the daily scale by the end of this week or next week, well then this weekly might be able to turn back up. And if that weekly does turn back up, we just talked about how they're using stocks to hold the market higher. A lot of the time you'll see this. Every stock is going down, but for some reason Apple's going up. Every stock is going down, but for some reason Nvidia and Apple are going up. That is causing those indices to hold up higher and not allow those algorithms to kick in to say, hey, yeah, sell these orders. So one thing we need to pay attention to is if they're going to use another stock to pump the market higher. And that is maybe going to be something like Google if it curls up on the weekly scale and we see other things turning down. So if Google does turn up on the weekly scale, we can go up higher, we can test the high, we can make a new one, and then we want to watch out for a divergence at that point for Google. I'm going to keep showing you guys examples because they are popping up everywhere. Netflix showing major points here, and we talked about Netflix down in here. Hey, you have the chance to go test that area. I'd make a point between those two highs, right? We did that live, and we're seeing this. Is this going to cross over? That's going to be a big deal because you have the divergence. It confirmed once. You get a fake out. You turn back up into positive territory. Management of the trade is in the course for a reason. If you're able to manage risk, if you're able to manage your trades actively, you know, we talk how stop losses are okay, they're good, but then the market makers can see your orders. They could go grab that thing and shoot it the other direction on you. So we teach you how to manage your trade actively without using stop loss, right? We use other time frames in order to do that. It's a good way to do it, but I would get that information down in the course in the description because it is very, very unique for someone to say, hey, this is how you actively manage your trade. And a lot of people don't do that. That alone will make you better than 90% of investors or traders, 90% of traders out there. So if this crosses down, that's going to mean bad things. That means we could end up all the way down towards 543 before this thing catches a bounce. So I want to pay attention to the monthly scale here. You notice that there is divergence on your RSI, but not necessarily the MACD at the same time. Okay, we don't have it at the same time, so we have to be aware and at least open to the fact that this can turn back around, okay? Or if it just piles down like this, right, we curl over, but we remain at elevated levels, we remain up in here, and then we curl up, we have to be open to positivity. Am I leaning towards that? No. I think the indices, I think the SPY and the Qs have already maybe formed that major top. If we curl up, we'll change our thinking, but for the most part, it looks like this thing is going to crash down. And it looks like it's going to crash down harder now, which is very interesting because originally we just thought, hey, this might be a corrective move for people to rotate into TLT, but TLT is actually experiencing bad things as well. Very interesting to me that TLT is experiencing weakness because you have monthly divergences down here. You have monthly divergence on the MACD, you have monthly divergence on the RSI, and both of those are relatively significant. And as we pull that into a weekly chart, you're just going to see how significant they are, right? You're starting to see if I hold my line here, that is higher. Right? If I hold my line right here, that is much higher. So you remember back in the day, we talked about this over on YouTube, but everyone asked me, where's your buy area for TLT? My buy area was 82.50. You can go way back, way before this was at 82.50. We said the weekly's curling over. If that hits 82.50, that is my investment area. And so that is what I did, and I've managed the trade throughout. So this is where we need to pay attention to TLT. Is it still going to be some kind of handle? Is this still some kind of handle, or are we actually going negative here and this can start to get ugly? One thing to note here for the daily scale is you are way down into negative territory. We've seen yields go dramatically higher, so we'll go into the shorter time frames for those yields for TLT, because even though this is turning down, you actually still are holding those reversal signals. Now, we had a management of the trade, right? I had to manage a trade at this low, but that's perfectly fine because I'm just saying, just in case I'm wrong, just in case TLT turns down, right? I'm giving myself that 1%. I actually think TLT still has the chance to do this. But I think also I need to be a good trader and not risk my money on a thought, right? I'm following my indicators. The shorter time frames told me to manage a trade here. So we're managing a trade. If that can turn back around, I'm telling you right now, there is still a reversal signal here if TLT starts to whip in the other direction. But we have to see if that comes to fruition throughout the week, right? If that actually happens, then we can make a decision and we can react. AMC looks pretty good still, right? It's holding up relatively well, right? A lot of stocks going through pain, some stocks going through positivity, but that's mainly because of earnings. AMC and GME are just seeing positive days, and that's what you want to see from these as that daily MACD is turned up. We already showed you the monthly scale, how everyone's telling you that Nvidia is the best investment. Everyone's telling you that Apple's great in these levels, Meta's great in these levels, right? But at the same time, we're like, well, their MACDs look like garbage. They look like the opposite of what they're saying, while AMC is still curled up. It is in negative territory, but it's curled up on the monthly MACD, saying this could have potential to turn up over time. So that is something I would pay attention to. GameStop did something crazy this week, and I think that's fantastic. But first of all, look how much closer this was to the center line. Obviously, if that MACD turns down, I don't think GME will be safe to some kind of crash. But if a crash happens and they have liquidity issues to force the stock down, that can actually shoot things the other direction. I think it's a key time to pay attention because of the daily scale. The daily scale here for GameStop, which means good things for AMC, is turning up in positive territory, and we've been talking about the divergences at these levels. We talked about the 2-hour that gave a signal in here. We'll talk about that a little bit on Sunday. But for the most part, why were we excited about this move? Well, because for the first time in a very, very long time, you see the purple line here. We give you the updated ranges for where you can see crazy stuff, where the market maker, where the options market itself would be taken off guard by GameStop going up, and we got above those levels, which can cause a gamma squeeze. But a lot of the time you want that to happen on a Monday. Why do you want it to happen on a Monday? Because the closer you get to Friday, they start to really fight the stock for those expirations. But right now I'm telling you, this took the market makers off guard, and you closed the week above the weekly expected move. And I think that is a big sign. Are they going to seriously try to fight this stock? They have to seriously try to fight this stock, because if it goes outside of another weekly expected move, which we're going to give you that updated level on Sunday, if it goes above that next week, I'm assuming there's going to be more implied volatility. If it gets above that again, you're going to get margin calls out the ass. I'm just going to be honest with you. You might get these people might get margin called because it's in an unexpected area, and this is where we can lead to gamma squeeze. You're already seeing the indication that we already could go into a gamma squeeze, but they fought the stock. So you need to break through next week's range to really see some crazy upward price action. If you really want that moment to happen, you have all the signals here that say it can, but you want to be aware of those shorter time frames if those are turning down, which is happening now. So we'll go into that on Sunday. Now, volatility. If you have been a part of this channel for a long time, you knew that back in October, we were calling a bottom due to a lot of signals from Apple, right? We were using a certain stock, a big stock, to tell us if the market was going to head higher. We saw signals from Apple, we saw signals from the Qs, we saw signals from the SPY all at the same time. And we said, hey, look at this, we're testing that weekly 200 on the volatility. So this is the VIX. And the reason that we started to get bearish here, right? When this happened, we said we're probably going to an all-time high, expect volatility to go down to 1212. Then when this happened, we saw reverse signals, and we said, hey, that crossed down, watch out, because implied volatility will most likely be subsiding, right? Volatility itself might be subsiding, and we're probably going to go to all-time highs. That's fantastic. Then we see some signals up here. They reverse, but they hold up better. They never curl down on the weekly MACD, and you had divergence down here that told you, hey, volatility is about to scream. You probably saw volatility go insane. Everyone was talking about it. Hey, the weekly chart told you, hey, something really bad could happen soon, right? And that happened right here. So volatility at a point of 1671 was saying, hey, volatility can really come in here. And we hit a high up here of, what is that, 65.73. Follow your indicators. You will find good trades. It doesn't mean, hey, if I'm late to a trade, I have to hop in. No, look for a good setup. It will really help you out. But the weekly scale here has not turned down. And you notice as we hit all-time highs, what do? We go to 1212. We go to 1212. We go to 1212. We hit all-time highs while volatility is behaving like a bear market. The bear market looks like this when you hold above these things, right? We probably have to go to the daily for this, but when we hold above that 200, we have that 50 crossed above the 200, a major crash signal. That's when a bear market can really ensue. But we're seeing that behavior at all-time highs. That is very freaking worrisome. You've seen it for a long time, because when you do see all-time highs, normally you see that turn down and go down towards 1212. But you're noticing it's just like in the past. We're holding that 50 above the 200, except this time, because we're not allowing the selling, I think they're just not allowing the selling to hit the tape, because I think this should already be in a bear market, and I think we're about to see some kind of big drop that puts us into a bear market. That is my true opinion at this point. Okay, so why I want to pay attention to this, what I can pay attention to if I'm wrong, is if this daily scale does turn down. That means we might have bought some time, but if we lose that 200, we might have bought ourselves some more. I do think if we do turn down here, you have the opportunity to turn up off the 50, because that is starting to turn up. And I think that if you're going to go below that 50, you still got to watch out for the 200. So we could still go through another period of time where you're hitting all-time highs, but the volatility is still above the 200, holding that crash signal. One thing to note here for the structure for volatility for the VIX is we made this big cup. We made this big handle that could be considered its own cup. Now, what if we create another smaller handle here, and then we see volatility come in with some craziness? And I think this might even add up to, hey, if that daily's not going to cross down, this might go right into a 2-hour pullback that turns up off of 20, and you see volatility come back in on November 5th with the election or right after it. That's what it looks like to me at this moment. So the main takeaway for this video is, are we about to see a major downturn in a lot of markets? Because AMD is really telling you last month, hey, my monthly momentum is weak. So any kind of bounce that we get this month, you have to treat it with caution. That's why you might want monthly expected moves. And because we're behaving like a bear market now, I assume that we're about to see those really big swings. Because in the market these days, it's been, hey, if you got a big range, big implied volatility, for some reason, we doodle around and we do nothing. We gap up and then we do nothing for the day, and we don't exceed that range. We don't even get close to touching it. But on days where implied volatility is lower, the market is being taken off guard every single time. It's very, very fishy to me. This is AMD telling you, I have major weakness. You have multiple stocks showing you weekly major weakness that is confirming on the SPY and the Qs. It tells you be very cautious. Be very, very freaking cautious, thinking that this market is going to go higher for 12 to 24 months. You can think it's going to go higher in the near term, but these signals suggest that over the next longer, medium to longer term, this is going to be very freaking ugly. Thank you so much for watching today. I really do appreciate it. I think we touched on a lot of things that can be very helpful, and that is the goal of this channel. So if you would like us to be able to help out more people, please like the video. I really appreciate that. Subscribe if you want to join us for Sunday. And if you want to get into some learning over the weekend, it's raining here. I don't know if it's raining where you're at. It's raining really bad here. So I'm trying to do this so my electricity doesn't go out. But if you want to dedicate yourself to some learning, if you're stuck in the house or something like that, do something good for yourself. Read a book, get to some learning in some way. Now, I do encourage not looking at stocks all weekend, right? I still think you should do something fun. If you're in an area like mine right now, we might have to order some DoorDash or something like that. It's pretty bad out there, but I'd kind of feel bad making someone else drive out in this, so we might just cook at home. Thank you guys so much for watching. I really do appreciate it. You guys are fantastic. A lot of people come into the live video. If you do have questions about the course, about anything that we talked about today, about the ranges, about anything, really, we like to talk about a ton of topics. We even talk about things not related to the market sometime. I'm very into psychology, but if you'd like to join us, ask a question, come to the live video, okay? We're live every single morning of the week, right? During the week, we go live every single open, and we try to be as helpful as possible, showing you those daily expected moves. Thank you guys so much. Hope you have a great weekend. Peace out.